Welcome, dear traders. Yesterday, traders awaited in some decisive steps from the ECB. Despite recent record inflation and skyrocketing oil and gas prices, the regulator did not hike the key rate, postponing this step for the next months. For this reason, investors are now focusing on US inflation data. It will reveal whether consumer prices have really declined in the world's largest economy. The figure will have a huge impact on the stock and the forex markets. Let's discuss what happened in Friday's Asian session. Risk sentiment decreased sharply yesterday. The sell-off was triggered by the results of the ECB meeting. The regulator kept the key rate at the zero level. It plans to raise it only on July 21 by 25 basis points. The central bank also hinted at the likelihood of a more aggressive tightening in September. Investors were less willing to buy risk assets following such statements. US government bond yields climbed higher, while Wall Street saw the biggest decline since mid-May. The S&P 500 and the NASDAQ fell by more than 2%. Pessimism spread also to Asian stock markets. The Nikkei 225 dropped by 1.4% on Friday, while the S&P ASX 200 slipped by 0.9% to a new one-month low. Analysts reckon that except the inflation report is pessimistic. The figure is likely to be high. Inflation is holding firmly at its all-time highs. However, even the slightest drop may boost optimism to the market. Further movements on Wall Street will depend on this report. The question is whether last month's pullback in the stocks occurred only once or it became a trend. The number of long positions on the forex is growing following a sell-off in the equity market. Rising oil prices also facilitate the growth in the currency market. Even if the US inflation has already reached its peak, consumer prices will continue to rise as long as the prices for commodities are soaring. Oil prices have already approached a 13-week high. The US dollar index is trading near a 3-week high. On a Friday, it climbed above 103 versus its main rivals. At the time of preparing material for this video, it approached 103.29. It was also moving in the intraday range of 103.05 and 103.34. After a sharp rise yesterday, the US currency was consolidating at the same levels ahead of inflation data. Japan unveiled its producer price index in May. It decreased to 9.1% versus 10% in April in annual terms. This report did not help the yen strengthen as well as the Bank of Japan's monetary policy. The regulator is being against the general trend, keeping interest rates near zero, whereas major central banks have moved to monetary policy tightening. The yen may soon reach its 20-year low of 135.20, moving downwards. The last time the price touched this level was on January 31, 2002, and some analysts are confident that the yen may slip to the lows of the past century, namely October 1998. In the Asian trade, the yen rose slightly amid the US dollar's consolidation, trading at 133.84. The dollar-yen pair was moving in the range of 133.34 and 134.48. As seen on the chart, the Aussie was also not ready to give up. It tried to advance against the US currency. Being the risk-sensitive currency, the Australian dollar has been sliding down for the whole week due to falling stocks. At the same time, rising oil prices and expectations of China's exit from the lockdown were the main drivers for the Aussie. As for China, negative news came from there. Some districts in Shanghai had to reintroduce new quarantine restrictions. Nevertheless, the Australian dollar took advantage of the temporary consolidation of the US dollar and edged higher. At the time of preparing material for this video, the pair reached 0.7334. It was trading in the upward corridor of 0.7085 and 0.7139. And that's how trading was unfolding in the Asian session today. Now tensions are high as traders are expecting inflation data in the United States. US Treasury Secretary Janet Yellen believes that there is a path to a soft landing. She is also confident that the US economy is highly unlikely to slide into recession. We will see how accurate Janet Yellen's statements are a bit later. Subscribe to InstaForex TV channel and stay up to date with the latest market events. See you soon!